Welcome back to another Earnings All-Stars video. I'm Tracy Reineck, and this is the last one for this earnings season because we're getting the retailers and then things really wind down pretty fast. Now, we will get NVIDIA, but I just did a Market Edge podcast on making the case for buying NVIDIA, where I included all the charts and all the fundamentals, everything on NVIDIA in that video. It's a video podcast, but it is here on Zacks.com/YouTube on our YouTube channel. So check that out for NVIDIA's chart. And we will still get a few more tech names coming in, and I'm bringing one of them to you today. It is one of the cybersecurity companies, and it is an earnings all-star. So let's dive right in and see what's going on this week in earnings. So we will have, as I mentioned, some top tech companies reporting even this week. And one of those is Palo Alto Networks. Yes, here's the chart. I'm bringing you the price consensus and earnings surprise chart because so much is going on with those consensus right now with the tariffs, guidance being withdrawn, possible recession, whatever else is happening. So it's good to see this dual chart where we're getting the earnings beats plus what the analysts are expecting on earnings. And you can see not a single miss here going back 5 years. This is really impressive from Palo Alto Networks. It is cybersecurity, so that has been a hot area. And last quarter managed to beat again. Let's see, it's a little bit smaller green arrow. Yes, just 3.85% beat there. But look at what this chart is doing. We had the big sell-off to start the year on the tariffs, worries, Liberation Day, and now this huge rally. Over the last month, the shares are up 12.9%, and over the last year, now up 22%. And then we've got a 5-year stack of 420% over this lovely chart going up. But look at the earnings. Very nice earnings gain year after year. The earnings estimates for this year aren't really coming down much here, if at all. So the analysts are still pretty bullish. Palo Alto Networks not really impacted that much from the tariff side of things, at least so far. So they don't have to worry about that so much. That's why you've got this big rebound. Biggest question is, will we meet these highs here in late 2024? PE is pretty high here at about 60 times earnings, but investors have been willing to pay up all these years for that. So we'll see if we get another breakout here. But this is Palo Alto Networks with the perfect chart. PANW is the ticker. Then we're going to switch over to retail, and we're going to stay on retail for the rest of this week and this video. So the big name coming up first is Target. And you can see I pulled it up here. It is a Zacks number 5 strong sell, but no one should be surprised by that because scrolling down, look at what's happening with the earnings. It is on the decline here pretty substantially, and we're seeing these cuts here now that the trade war is going on. The stock has already been sinking and had sank during, heading into Liberation Day. It's got a little bit of a rebound. 1 month, it's up 8.6%. So it's off those 5-year lows, but not by much. Over the last year, down 38.6% still. It is cheap, but with those earnings estimates being cut, it's a bit of a value trap at 11 times earnings. What about the earnings surprise? Because that's what we care about. This track record has not been great since the pandemic rush ended. We had a difficult 2022 as the Fed raised those rates. And then they turned it around for a while here in 2023 on the earnings surprise side. But then it's been hit or miss ever since. It did beat last quarter by 7%. So the stock still dropped on that though. And, we're looking for guidance. What's happening with margins? What's happening with traffic and the store sales? And so all these things will be a factor here with Target. And so this one on the watch list though, everybody's seeing, can it turn around here? Ticker TGT for Target. Then we're staying, as I mentioned, on retail, and one that is having a big tariff impact. Canada Goose, ticker GOOS. It's a number 2. So what's happening there? Well, we've seen some cuts, but they've already been happening all these years. And now we're seeing maybe a little bit of increases here. That's why, maybe things aren't going to be quite as bad as everybody thought. And we are seeing earnings growth expected this year, even with the tariffs. Now, the shares did trade down to 5-year lows heading into Liberation Day there, but 1 month they're up 15% off those lows. 1 year, however, still down 30.9%. 5 years still down 52.6%. And I forgot to mention on Target, it was near the 5-year lows as well. 5 years down 18.5%. So both of these just really struggling over the last 5 years. It is also cheap, PE of 10.6, but it's put together a nice little track record here. 4 beats in a row, even though last quarter was very small, just 1.85%, but a beat is a beat. Can this all be priced in now on Canada Goose? Could this be the low? We will see. Ticker GOOS is that ticker. Staying on retail, going back to apparel, and a little bit with some of the luxury side, Ralph Lauren, ticker RL. It's a 3. What's it looking like? Well, this is a change of events compared to the last 2. It's not trading near 5-year lows. It's now trading near 5-year highs. And look at this rebound off those Liberation Day lows. That is a drama rebound right there, and a V-shaped rebound if I've ever seen one. This is a classic case of it if you're looking for examples of a sharp V-shaped rebound. Shares up 36% in just the last month. 1 year now, trying to touch these 1-year highs, but 5-year all-time highs here, but 1 year gains up 65% in the 1-year stack, and 5 years now up 319% in the 5-year stack for a retail and apparel company. But look at this track record. Beats every quarter except going back to 2020 during the pandemic. And this big beat in the very beginning of the pandemic, look at that earnings surprise miss, 3,300% miss that time. But remember the supply chain issues, economy shut down, and all of that stuff happening. Well, we've moved out of that, and the shares have shaken off this 3-year stretch where they went nowhere and now are soaring near 5-year highs. PE now is at 20, even with this earnings growth. And we've seen a little bit of pullback here in 2026, not so much for 2025. So that's something to watch here. But RL, one of the big retail/apparel companies reporting this week, kind of a bellwether, and things are looking good if you're on the bullish side on retail. And then we're going to wrap it up with one of my favorite retailers. We've talked about them many times because of their earnings surprise track record. Deckers Outdoor, they make Uggs and Hoka, ticker DECK. It's a number 4 right here. That doesn't bode well. As we scroll down, it's got the great earnings surprise track record. Also an earnings all-star, just this one miss back here in 2021. And that was on excess inventories and supply chain problems where they had to dump a bunch of inventory. And so a lot of apparel and retailers had this issue at the end of 2021, but they solved that. And then the stock still went down in 22 when the Fed raised rates, but now it's been off to the races with new all-time highs to start 2025. But what a huge drop in Liberation Day. So Deckers, over the last month, though, we're getting not as extreme as we just saw with RL, but a real sharp rebound here, up 23% in the last month. 1 year down 15.2% now because we're going all the way back, down here. So we are in the red over the 1 year period, but 5 years, even after this big pullback, 5 years now up 420%. That's about equivalent with Palo Alto Networks, a tech company. So quite the rebound and rally in these shares. PE of 19.8. That's pretty cheap historically. I've always been waiting for it to go under 20, even on the big pullbacks like we saw back here. Waiting as a value investor to get in, but it never got down quite cheap enough for me to get in. Is it this time? Maybe I should be looking at it again. We'll see. I'm expecting another beat because of this track record, but it is global and shoe manufacturers have been taking a hit in this tariff situation. So what will happen here with Deckers? Still expect great momentum on Hoka and Uggs, but we will see Deckers, ticker DECK. So as you can see, some very interesting charts, some interesting rebounds off of the Liberation Day and the tariff fears, and some that are just at the 5-year lows. So, and then we'll be watching some of these tech names still coming in as well, including Snowflake. They're going this week. We'll get some other retailers on the home side. We're getting Home Depot and Lowe's, and we're getting Toll Brothers on the home builder side. I'm going to be watching all of those. I own Toll Brothers, and I own it in my both personal portfolio and in Zach's value investor portfolio. So there is still a lot going on with earnings, but as I mentioned, this is our last earnings surprise chart video, and with these all-stars for this earnings season. But be sure to tune in to Zacks.com for all of our coverage of NVIDIA still to come. And there's others that I will be tweeting out charts on. So be sure to follow us on social media and my accounts in particular. I'm under just Tracy Reineck on X. I'm on Blue Sky. I'll be on StockTwits. I'll be everywhere you can find any kind of charts I'm going to be posting. So be sure to get us somewhere. Be sure to get all of our videos on YouTube. Go to Zacks.com/YouTube. And I will be back in a couple of months with the start of doing this all over again. We'll be farther along into the tariffs and the trade war. Maybe we'll have some more deals by then. But there'll be a lot to discuss in a couple of months with the second quarter earnings season. And so you don't want to miss it. Be sure to subscribe, and I'll see you in the middle of summer with some more charts.